Hi guys, Akiba from CryptoSlate here. Today with me, I have Matty Greenspan from Quantum Economics. How you doing, Matty?
What's up, Liam?
Good, good. So, right, let's go straight into it. I just want to have a general chat around the crypto space and get your hopefully amazing brain to have a think. The first one I noticed on Twitter though that let's chat about. I saw Plan B recently blocked you. I'm guessing you're not a fan of the stock to flow.
No, I said something that was truly controversial. It's actually something that as a financial analyst, my regulator, SciSec, who gave me my license, basically says that every time I post a chart, I need to also post a disclaimer that says past performance is not an indication of future results.
Hmm.
Which basically means you cannot use a historic chart to tell the future and what might happen in the future.
Yeah.
And I've been saying this since very early on when people asked me about Plan B's analysis.
Hmm.
And I guess it finally got under his skin. It's very clearly unbuckling. Things are unbuckling for
Hmm.
him, though he still does have nearly 2 million followers, so things aren't all bad.
So, I mean, in terms of the stock to flow model, we kind of invalidated it in the last few weeks. I would argue. Why do you think that the model failed, or do you think it's just failed, like flawed from the concept?
Yeah, it's a conceptually flawed design. You cannot use historic data to tell the future. It's simply impossible. And giving people kind of this idea that you might be able to predict what the price of Bitcoin might be, especially years in the future, it's ludicrous. And even Vitalik recently tweeted at him saying that he deserves all the mockery he's getting right now.
Hmm. So, I mean, moving. I mean, obviously, a part of that is obviously like halvings and looking at sort of like there's very few other commodities or securities or whatever we're going to decide Bitcoin is, where you do know the future supply though. And that is obviously the difference that we know it's going to get halved every arguably 4 years. So does that not come in? Like, how do you kind of factor that into your thinking, or does it not make a difference? It's still too
It
subjective.
does. No, it definitely does. And for that, I would commend him. I think that, he has kind of pioneered this or championed this idea of a 4-year cycle for Bitcoin. And I think that that's played out so far
Hmm.
more or less accurately. I mean, this is, the 2-year mark or just after the 2-year mark we are right now. That is historically the most painful time for Bitcoin. And then
Hmm.
as we get closer to the halving cycle, I think there's more likely to be a run up in price simply because of the expectation of lesser supply coming online. However, to pinpoint it on a chart and say, okay, well, this is what the price is going to be, you can't really tell the future. You can tell the future as far as what the issuance is and what the supply side is going to do. But the demand side, I mean, that's anybody's guess. I mean,
Hmm.
how much people are going to want it, how much institutions are going to be buying it. I believe that if we can break it down into the cycles so far, right? The first cycle of this first bull run of 2013 was the early adopters. 2017 was mass awareness in the retail market. I think it was mostly driven by retail traders.
Hmm.
And then the 2021 bull run was all about institutional
Hmm.
adoption.
It
And I
flipped,
do
didn't it?
believe the next one is going to be about central banks
Oh,
and
really?
them accumulating, right? But if we go according to the schedule, I mean, that's not for another year and a half, 2 years or so.
Yeah, so I think within that, I think you can definitely tell kind of the quote unquote hopium that appeared with the kind of people starting claiming there's going to be a super cycle rather than it kind of going onto this normal sort of schedule that we've got. And my issue with that is that, like, I think with any intelligent investment, as soon as information is known, it's priced in. Like, so on that basis, and I think, and I do mean known, because I think it's pretty clear, especially in the last 2 years, that the stock market, the crypto markets hate uncertainty. As soon as there's uncertainty, when it panics, if we know that there's going to be downward pressure, things are usually quite stable. If there's upward pressure, again stable, they'll go in one of those directions. But whenever there's uncertainty, it can go any way which way. So knowing that there's going to be a halving in 2 years' time, that there's an argument whether it's priced in now or not. Is it? can you still sort of honestly sort of believe that by the time we get to the next cycle, given that you say institutional money's well in there now, that we would have a similar sort of cycle along the next halving? Because I honestly can't believe that institutions are going to wait until the halving and go, oh, supply's gone down now, let's buy.
Yeah, no, that's an interesting question, and yeah, the idea that you referred to is known as the efficient markets theory.
Yeah.
That any kind of knowledge that's public information is going to be immediately priced in. It is still a theory; it's not a fact. So I think that there have been situations in the past where there has been public knowledge that hasn't been immediately priced into. I think that uh, the Ethereum merger, for example, I think there's no way that we can really price that in to the
See, but I
markets
think
yet.
that's because of the uncertainty still. So my argument is not that as soon as things are known, it will be priced in, because if you know that something's going to happen, you don't know what the outcome's going to be. But
Right.
the intent to buy is kind of priced in, or like it's kind of with the Ethereum. I think that's not going to get priced in until it happens, and we know that there's not a complete kind of collapse, especially with everything that's been happening with staked Ethereum and Lido recently, and all the kind of the depeg, so to speak. So for me, it's about that. Unlike say with Ethereum, where we're not quite sure what might happen with the merge, you
Right.
are still placing a bet there that it's going to go well. With Bitcoin, well, we know Bitcoin's going to halve within a month period, sometime in 2024. So
Right.
when would that
Right.
start to get priced in, or do you not believe in efficient markets at all?
So what I feel here is, I mean, I'm not sure about the efficient market theory. I think that I've seen convincing arguments in both directions.
Hmm.
But I think that what the major factor and the major influencer of the price of Bitcoin is actually the US dollar, right? Which is the main unit that we use to price Bitcoin in.
Hmm.
Um, and the controller of all dollars in the world, the Federal Reserve,
Hmm.
who, according to our research, has been the main driver of Bitcoin price all along, even greater in some cases than adoption itself. And that's when the Fed is pumping money into the markets like there's no tomorrow. The price of Bitcoin tends to go up, and then when they
Hmm.
start to pull that liquidity back, the price gets a lot more volatile and tends to go down. And we've mapped that on the chart according to periods when the Fed was printing, when they were taking back liquidity, raising interest rates, and right now they're very much in a tightening cycle. And while Bitcoin was zooming in 2021, it only so happens, right, that the 4-year halving cycle kind of overlaps what the Fed was doing, which I
Hmm.
think is very interesting. And so far, that's kind of worked out coincidentally every single time. So I think that we'll be able to only understand what's the greater influencer of price, right? That is it more about the Fed or is it more about the halvening cycle? Only once those two diverge, and then we'll be able to see which one is more dominant. But so far, what we've seen recently is the Fed rugging the markets exactly as we got to that historic pain point in the 4-year cycle.
Well, I mean that moves on to exactly what I want to ask about next. In that Bitcoin's never lived through a recession yet. If we are going to say that officially we're either in a recession or one's on the horizon, let's hypothetically assume that happens. Do you have any insight as to how you think that will play out with the price of Bitcoin and crypto in general?
Yeah, and people have asked me, a lot of the time previously, like what happens if the stock market crashes? Will Bitcoin crash along with it? My answer has always kind of been the same on this. It's been that, it really depends why, right? And
Hmm.
what's happening on the background. And at the moment, what we're seeing is um, that with the Fed, pulling back liquidity, basically going from being the largest buyer of financial assets in the market to being the largest seller of financial assets, raising interest rates, tightening economic conditions, which is going to, and even though they know it, is going to raise unemployment by drastic measures in order to get inflation under control. And with that, there's a lot of pain out there,
Hmm.
right? And people who are holding Bitcoin for a long time, there's not only there's the fear that it might go lower, but people need to actually, pay their bills. They need to actually kind of close the month. People need to follow up on commitments they've made during the bull run. And with that, I mean, people need, with economic conditions tightening, unemployment going up, right? People are suddenly faced with the choice: do I feed my family? Do I pay my electric bill,
Hmm.
or do I sell my Bitcoin, right? And that is kind of unfortunate, but that's what's happening all over the world right now.
So let's just switch gears slightly because I know you've got a little bit of an NFT collection, NFTs, and also I think kind of like gaming metaverse sort of projects. They're starting to become obviously like an asset class in their own. Like people are like, we've got NFT NYC, we've got NFT events going on alongside sort of main crypto events.
Really looked lit, by the way. I saw the pictures of NFT NYC. Were you there?
No, I wasn't. No.
My gosh, I was so jealous. I had a baby just now. I wasn't able to fly,
Oh,
but
congratulations.
thank you. We've named him Huddle. That's his name. But
Actually,
yes, actually, literally, his name is Hod Malchut David in Hebrew. First name Hod, which can be a nickname in Hebrew. Is often you add the suffix el at the end, so that's how you get the name
that's
Huddle.
incredible. The most crypto kid ever. So when people
Yeah,
say that they're crypto native, like your child will actually be able to say that.
yeah, indeed. It was conceived during the bull run when everything was great, and then come the time we go, okay, we gotta huddle this baby.
That's amazing. No, I mean I was at Blockdown in Croatia. That was an NFT event, and that was amazing as well. Like all the NFT art gallery that was there, and like the parties. It was definitely a completely different vibe to like say Paris Blockchain Week, where I was like a
Yeah,
few weeks previous. My
yeah, a
question's
lot,
actually
lot
gonna.
more degens at the NFT ones.
Mhm. Yeah, definitely, 100%. Well, my question's going to be: as a few people kind of talking about the concepts of like NFTs and all like metaverse projects decoupling from Bitcoin before the next bull run. Do you see any potential future like prospect of that happening?
That is interesting.
Given, I
Yeah,
think, especially with for me, I personally feel that the NFT one it has to be tied into the metaverse side of things because personally, I think that the utility and use case of NFTs is still developing. I think we're not almost all there yet, but a really great Web3 game that that could come out towards the end of this year could do that on its own because let's say our kids going to really care about the price of Bitcoin if they're playing a game that they love and enjoy and they're earning money from it and someone's got the tokenomics finally right for a Web3 game. I could see
oh
that
yeah,
potential, but what do you think?
oh sure. And I'm advising one at the moment, which is called Supremacy Game.
Mm-hmm.
And they've managed to magically hold their token price
Wow.
pretty much throughout the bull run. The bear market over the last 2 months has been fairly steady.
Wow.
And that they've been progressing on the game, making upgrades. I mean, they actually launched the token at the same time as they launched the game, so there was no kind of period of okay buying a token and then say what's the game like. No, people were able to exactly like play it as it comes out and decide. And then as they go, the roadmap is incredibly deep and forward looking, which can add different layers of complexity. But their token price has been extremely steady because people aren't going to necessarily play the game less because there's a bear market,
Yeah, exactly.
uh, and as well as the NFTs robots that they have within the game.
Mm-hmm.
The price of those, the floor price did come down when the price started crashing, but then they found the floor. They found like I think what's kind of that like the absolute bottom of like what those things are worth. What I would step in and buy loads of them at, right? If looking at the OpenSea pricing on those NFTs and going, well, wait a second, if it goes down below $50, I mean, that's a really good investment because every time one of those robots wins in the battle, you're actually gaining some of the tokens. So for me, I mean, it was like really kind of an investment decision more than anything that kind of kept those that I feel like kind of kept that floor price and enforced it on OpenSea. Um, to your question, I mean, I tend to see the entire globe and entire financial markets, right? NFTs and crypto and stocks and everything, real estate, all is kind of one kind of harmonious ecosystem that we live in, in the world that we live in. And when the Bored Apes were at $1 million, right, and there were metaverse tokens, selling for probably hundreds of times what they are right now in the bear market, right? I feel like there was this kind of that euphoria that was felt across all financial markets. And even we saw influencers and people of great repute, kind of standing in on the investment side and talking about diamond hands and blah blah blah. And then all of a sudden the markets fall, all that diamond hand crap goes out the window, and everybody's in kind of like this panic mode into like kind of preserving everything that they can. And that'll mean, if you're able to get $1 million for a Bored Ape, you're going to sell it, right? And then the floor price on those type of projects comes down. But of course, that's where the opportunities lie. I've been, looking at some NFTs for a while, going, wait a second, that's just too expensive for me. And now I'm able to kind of afford them. And, I think that SBF is kind of doing the same thing, going, wow, look at all these companies. I would have liked to buy them a long time ago, but wow, now I can actually afford them.
So you're saying that Celsius is just an NFT to SBF?
Well, yeah. I don't know if Celsius is ever going to sell to FTX, but BlockFi, for example. I mean, I think that or Robinhood. I think that SBF wouldn't have been able to dream of buying Robinhood in a bull market, but in a bear market, it's actually something that's viable, right? That's where the opportunity comes when. And this isn't new stuff of investing. I mean, Warren Buffett's been preaching this wisdom for a long time, even though he missed the boat on Bitcoin. He still has a lot of valuable insight, I believe. I've been learning from him ever since I was a kid.
I think.
But yeah.
Yeah, I don't know. I think that there's a report coming out by Nansen today that highlighted a lot of transactions of staked Ethereum coming from Celsius to FTX. So in the same sort of numbers as you were seeing from some of the other platforms. So they definitely were paying down something in transferring it to the platform. So I mean, what's your sort of take on the whole kind of Terra contagion? My thinking is there was like 16 billion on Anchor. We haven't seen the end of it yet. We don't know where all that 16 billion went. It's not all being fully analysed and come out. And you say that the contagion that happened, I think one of the arguments is that essentially the reason for the staked Ethereum depeg was due to all the bonded Ethereum coming out of Terra back onto the mainnet, which again is just doesn't feel. You're looking at the price of Luna, you're looking at the price of UST. You're not going to think that Ethereum is going to be affected by this because there doesn't seem like a direct correlation. But with bridge tokens, there's a massive contagion. Do you think that we've seen it all yet, or we still got some surprises?
Well, without going into the specifics, just to speak generally, this is what happens when there's a bear market, right? And where did the people ask me, oh, the stock market fell by $5 trillion. Where did that money go? It actually didn't go anywhere. It went poof. It actually never really existed in the first place.
Unrealized.
Right. Exactly. It was unrealized gains, and people look at their balance and go, oh, wait a second, I'm a millionaire now, but they aren't a millionaire until they actually cash out, and they can't really cash out because then they won't be then they'd miss out on the upside, and they weren't actually able to enjoy that upside unless they took that risk to begin with. So if everybody cashed out all at the same time, obviously that money would not be there at all. Like it would just it would not exist, because as soon as the first few started cashing out, the markets start to fall, and that's basically what it means. So I think that there's kind of a lot of that within the Terra Luna system, and what I see that is like this. I really see the markets in this kind of regular cycles. The 2008 crisis and today's crisis, I don't think are different at all. Actually, I look at them as extremely similar. Terra plus Luna's market cap, each of them 40 billion. So combined 80 billion market cap is almost exactly the market cap of Lehman Brothers before the fall. So in my view, I mean, Lehman Brothers, that's where at that time, the leverage had built up. That was the most vulnerable portion of the market. In this case, quick and easy money went to Terra Luna. Everybody's looking to make a buck without really understanding how it's being made or why, and they just see the prices going up. They get the euphoria and jump in. That's where it was back then, was in the real estate market, and today it's happening, in the crypto market. And obviously the regulators see it a little bit differently. Back then they're like, okay, well, too big to fail, let's bail them out. And crypto's not getting any bailouts. We're getting additional regulations instead, which kind of sucks. But
I mean, there's an argument for the internal bailouts that are happening from SBF.
Those aren't bailouts. He's buying distressed assets. He's buying opportunities. He's buying things at a discount. SBF is not the Fed. He's not the lender of last resort. He's a businessman making wise business decisions in a bear market.
I mean, yeah. I mean, he's taking equity in all these companies that he's offering loans to. So
100% he is. He's getting really good deals, and I've been getting some good deals myself lately. So
I think he's by far the biggest shareholder in Voyager now.
Oh yeah. This is what you have to do during the bear market, Liam. You have to make gains during the bear market. There's there was and this, it was the same thing in the last crisis, right? Somebody who had bought stocks in the 2007, and then 2008 came along, they grabbed their head, go, oh my gosh, I'm down, and I'm 50%, 60%, I lost my money and cashed out. They really did lose, right? Anybody who held for 3, 4, 5 years, by 2013, the market had completely recovered, and or I think even even a bit before 2013, the market had completely recovered. If you held on for another 5 years, you're like stinking rich again, right? So the people who hodl, right, they're going to be at an advantage, but the people who are able to make gains during the bear market, right, they're the ones who are going to reap the rewards when the bull comes back.
As you said before, we can't use past performance to detect future gains. So
Correct.
One of the things that I always like to kind of go on like Bookcoin and read what people that are super anti-crypto like to say. And there's definitely a belief from people outside the crypto industry that this is a cult. And sometimes it does feel a bit like it. Like I was at a party with Nate and like Alex from Swissborg and stuff in London, and like everyone's like, oh yeah, we're down like 80% on this, and like you're looking at all the tokens, and people are like talking about like portfolios and or like investments and tokens in general, and you're just thinking, this isn't normal. Like you think of any other sort of investment or where people like say if the S&P was down 60%, the calmness that there is in crypto, that things will sort themselves out, that ultimately comes from a belief in the technology. But there is definitely a cultish element to it, and obviously a lot of it's built on the fact that it's on a cycle, and we're going to keep going on this cycle. Do you think we're delusional? Why is it different to a cult? Why, if we can't go on past performance, what is it to you that makes you sort of bullish long term?
Is crypto a cult, I think, is the underlying question that you're asking me here. I don't believe so, no. I believe that maybe more of a religion. There are fractures in that religion. I'm Jewish, and we see religion very much like a blockchain, which is kind of handed down from generation to generation, right? And the way that we prove what's happened in the past is only because my dad told me, and his dad told him, and we go all the way back to the Genesis block, which was Mount Sinai. And along the way in religions, you get fractures, right? And you get splits, differences of opinion. No, I believe we should have 8 megabyte blocks, right? And then those people will go that way, and either they'll continue to thrive as a separate part of the same religion, or create their own religion entirely, or they'll maybe those 8 megabyte blocks were not such a great idea from the beginning, and it wasn't strong enough basis to form that sect of the religion, and they'll just die off. So no, not a cult. A cult, I believe, would probably imply a bit more self-delusion, and kind of dangerous habits forming. Yes, I believe that there are some who've taken it a bit too far, right? And they have formed those dangerous habits. I mean, maybe you can call them a cult, but just believing in Bitcoin, I believe that's more of a hardcore religion rather than the cult. I mean, the cult would be that if you go and wait a second, I should put all my money in a project called Terra Luna because CZ Binance is took a picture with their marketing manager, and oh wow, so I think that overall we're learning from the past, and I think that what does separate cryptocurrencies and Web3 from previous stock market bubbles is the idea of democratization of finance, the idea that everybody can participate, the idea that people can claim ownership over their assets without the need of a third party. I think that that's really revolutionary. And the fact that people are really believe in this kind of hardcore, I think that's justified. But then the question is, what do you do with it, right? If you're going to take that to ridiculous proportions and create a slippery slope, where you're saying, well, if it's crypto, I'm going to buy it, right? And if it, and then and hold it forever, or do something with it, or say, okay, wait a second, I've got this meme coin that's going to generate 40% APY, and you don't start asking like, where the hell does that 40% come from? Then yeah, I mean, that part it can get ridiculous. But the basis, the foundation, I'm not going to say that the technology. I think that the technology is actually a very small part of this, but the network effect of things that have stood the test of time, that have withstood several bear markets already. I think that that's very real, and that's something that that deserves the advocacy that it's seeing.
I don't disagree. I'm playing devil's advocate here to get the response and see what your thinking is on it, because I'm completely the same. I think that the potential that we've got with blockchain and the decentralization, there's so many people in the world that it can benefit, and I'd like to use my privileged position of where I'm from to try and help with that.
Where are you from?
I'm from the UK.
So, right on.
From Manchester, the home of Manchester United is pretty much all that anyone knows about where I'm from. But
sure.
So like one last thing I'd like to get an idea on is, because we've talked about that obviously that within kind of assessing either the market or projects, there's so the crypto fundamentals, there's the marketing hype, there's technical analysis, there's the general macroeconomic factors of the world and the other parts of the markets. Is there a percentage split that you feel that you can look at with those, or is it kind of just an intuitive kind of equation marked, sort of mixed in with data? How do you kind of utilize all those different aspects when you're trying to sort of advise people with your company?
Yeah, that's a good question. So any good analysis, any good research comprises all of the elements that you've stated. My feeling is that people should, and we've done even research on what's better, lump sum investing or dollar cost averaging, for example, and stuff like that. And actually, for as much as DCA and as the saying goes, stay humble, DCA, stack sats, and hodl. Lump sum investing is actually more beneficial because you don't wait on the side with cash. The longer time that you're in the market, the better off you're going to be always. And my personal philosophy that I've adopted over an entire lifetime in the market, I've tried short-term trading, swing trading, long-term investing. I've done it all, and I've seen it all. I've actually, as an account manager in several different brokers, literally seen tens of thousands of traders, met them personally, coming in with bright eyes and bushy tails, and having their ass handed to them by the markets. The success rate when I was getting started in Forex was ridiculous. Something like 0.5% of maybe all traders, whatever, you make consistent gains. And that was back in 2008, 2009 when I first started working at a financial broker. But these days it's much better than that. And the reason is because we're sharing information, because the internet as a platform for dissemination of information is much stronger. We're even coming out into a meme territory now, like diamond hands, right? With that term, right, evolved into 2 words, right, from this entire like concept that used to take an entire book to explain, right, which is time in the market is better than timing the market. You can't really buy the dips and sell the rips consistently, because the markets go up and the markets go down, and you can't really degree of certainty what exactly is going to happen next. My computer froze here. I don't know if you can still hear
I was only
me.
for half a second. Yeah.
All right. So my personal philosophy is very simple. Invest when you have excess capital, withdraw when you need the capital. And everything that happens in the meantime, and especially if you don't need that money for the next, the longer time frame, the better off you are, right? On the short term, you're taking a risk, right? If it's a half a minute, you're taking a huge risk. If it's a few months, you're taking a moderate risk, right? If it's a few years, you're already have very close to zero risk. Your fiat money is designed intentionally to go down in value over time. Right? Like the creators and the designers, the architects of fiat money don't even try to hide this. They say, we want 2% inflation. Yep. What are they saying? We want the money in your bank to go down in value by 2% every year. Now it's more like 8%, 9% globally. I think you just had 9.1% in the UK, which is absolutely bonkers. But the idea here is that you're when there's deflation, and there was a period of deflation, 2013, 2014, that was a crisis for central bankers. You didn't know it was a crisis because all of a sudden your money was going up in value and you were able to buy more goods with your stuff. And that probably didn't feel like a crisis for most of us. But for the central bankers, they're like, okay, we got to turn on the printing press and fight this deflation, right? And so the idea here is that the money in your bank account is going to go down in value. Holding financial assets, is over time is always going to be beneficial. The longer you're holding it, the more beneficial it will be. The less you're holding it, the more risky it will be. Which financial assets are you going to hold? That's a matter of a bit deeper research.
Very cool. Yeah, I like that philosophy. Right. One little thing that we've started doing to end our interviews is a little thing that I'm calling Shill or Fill. So you can either promote another project that you've got nothing to do with for 1 minute, or talk without saying or for 1 minute about something non-crypto related.
Shill or Fill?
Yep.
I'm not very good at not saying I say all the time. Every time I watch a recording of mine, I always go, why am I saying so much?
The tip for that is apparently to take a breath when you want to say it. It doesn't work.
No. Yeah. Sure. I mean, I shill near protocol. I don't have anything to do with them. I hold near, full disclosure. I do. I like the platform. It was introduced to me by our head of creative design, and I like the use of it. I like the fact that I could stake, near on, is very, through several different protocols in a very user-friendly way, and the rewards are quite high. I'm going to draw down now, but I'm quite certain that with the tools that are available and the tools that are continuously being built there, that I'll recoup that and be able to see a massive return on my investment during the next bull run.
So what specifically really brought you towards near?
It was really, I think, the look and feel, and then the idea that it was kind of just budding out, right? It had all of the elements of a successful blockchain, but not, in the top 30, top 20 yet. So a lot of room to grow still, but also, all of that activity, the development activity, and this kind of um, congruent look and feel, right? Like this kind of, everybody's kind of got the same, every project that's building on it has a very similar kind of user interface. The color schemes even are very similar, and it seemed like I was discovering something early.
I do think that UI and UX is something that Web3's still got a long way to go on. So I think if a platform that has a good user experience is something that is rare in this world. And I was brought the Cosmos. I quite like their user experience for the same thing. It just feels different. Having to plug in a different RPC into my MetaMask that just feels so kind of like I'm never going to explain that to my dad, like how to do it. I mean, it's just never going to happen. But brilliant. Right, well, Matty, thank you very much for your time. I'll let you get off. But it's been amazing catching up with you. Anything you'd like to mention to the audience before you go?
Yeah, get our newsletter. It's free. We need more subscribers. So if you're watching this, subscribe to our newsletter at quantumeconomics.io.
Yeah, that's just on the homepage, isn't it? It's just a bar right there. Just pop your email in. That's all you need to do.
That's it.
Brilliant. All right, cheers, Matty. Thank you very much for your time.
Thank you. Bye-bye.